So the last and most important topic of this chapter is EMA, Environmental Management Accounting. The definition is like this. The collection is a collection and analysis of information. Collection and analysis of information relating to environmental cost for internal decision making. For what internal decision making? It's a collection and analysis of information relating to environmental cost for internal decision making. Okay. So major areas where it can be applied is one is product pricing, while pricing the product, budgeting, then calculating costs, then savings on the environmental projects, calculating the savings. There are two categories under this environmental information. I told you if you should analyze the information, correct? So there are two types of information. One is physical information, the other one is monetary information. Physical information, it's like physical flow of energy, water, material. The information includes what? Physical information includes physical flow of energy, water, material, as well as wastes and emission. Whereas monetary environmental information accounts for environmental costs. It accounts for environmental costs that are clearly driven by efforts to control wastes and emission. Next, environmental costs. Environmental cost is classified into 4 classifications. What are those? First classification is a generic classification based on the boundary. What is this? This is internal environmental cost, external environmental cost. Internal environmental cost is borne by the company and there is an impact on the income statement. But external environmental cost is borne by the society. Like what? External environmental cost, like what? Like say soil erosion, forest degradation, change in the temperature, change in the climate, then use of water and energy resources. If we use, as an industry, if we use more water, they'll have shortage of water. So this is external environmental cost. Internal environmental cost, which is having impact on the income statement. So what are those? Waste disposal cost. We have to dispose the waste, correct? Waste disposal cost, regulatory cost. Regulatory cost like what? Taxes, cess, then duties, all these things. Then third one is upfront and back end. Upfront cost like taking permissions, back-end costs like decommissioning. So these are the things. The second classification, this is the first classification, which is generic, which is boundary. Then boundary related, business boundary related. The second classification is United States Environmental Protection Agency, USEPA. So based on the environmental accounting as a management tool, business management tool. If you remember tool, then it is a classification tool. So under tool there are four different categories. What are those? Conventional costs, potentially hidden cost, contingent cost, conventional cost, potentially hidden cost, contingent cost, then relationship and corporate image cost. These are the 4 costs. Remember, conventional cost like basic raw material, labor, then utilities, then capital goods. All these things are conventional cost. Second one is potentially hidden cost. It is hidden in the overheads. You have to make an intense, review of that so that you know that it's hidden. Then potentially hidden cost. Then contingent cost, you never know when it may or may not happen. It may or may not happen, like what? Legal fees, then penalties, fines, etc. Then relationship and corporate image cost, you have to spend on improving your corporate image. So these are the 4 types under classification 2, which is a tool. If you remember that the line says environmental accounting as a business management tool. If this is a statement given, then it is related to classification 2 and you have to write 4 points. Then classification 3 is Hansen and Mendoza. This was given in the previous paper, so we'll just go through that and you can ignore this completely. So Hansen and Mendoza, we have 4 classification: environmental prevention cost, environmental appraisal cost, then we have environmental internal failure cost, environmental external failure cost. Then under classification 4, this is not really important, we'll just go through the United Nations divisions for sustainable development. 2 points. One is cost incurred to protect the environment, then cost of wasted material, capital and labor. Okay. Now, very important section. What is this? EMA methodology related to management of environmental cost. EMA methodology. This is done phase wise. Okay. Phase 1, 2, 3. There are 3 phases. First one is phase 1, identification. You identify the environmental costs. Okay. Identification of environmental costs. Phase 2, allocation of environmental cost to the cost centers and cost units. Then phase 3, controlling the environmental cost. Phase 3 में you will control the environmental cost. Okay, the phase 1 and phase 2 are combined. So in that phase 1 and phase 2 we have identification and allocation. First you have to identify. To identify this cost, which is not easy, so you have to put an intense review. Like you have to do an intense review to know, because it is hidden in the general ledger. So you have to make an intense review to know, okay, this is what is environmental cost. Okay, so this is you identify. Once you identify, what you do, you allocate, correct? So you allocate such environmental cost. Then, so under this there are techniques for identification and allocation. To make our lives easy, they have put the techniques also to how to identify and allocate. So there are 4 techniques to identify and allocate. What are those? Input output analysis, then flow cost accounting, then life cycle costing, account activity based costing. So how do we remember this? The code word is LIFA. LIFA, like life. Is this life? LIFA. 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 So first one is life cycle costing, input output analysis, F for flow cost accounting, then A for activity based accounting, activity based costing. So these are the 4 techniques. Then you can go through these 4 techniques individually, which is very, very easy. So I'm not going in detail with that. Next we have the last topic, which is controlling. So now we did identification and allocation. The last one is controlling part. The controlling part includes 5 points. What are those? WWETC. WWETC. What is this? W stands for waste, water. E stands for energy, waste, water, energy. T, transport and travel. C, consumables and raw materials. Consumables and raw materials. Okay, let's quickly go through this. What is this? Waste. Waste means mass balance approach. Waste means mass balance approach can be used to determine how much material is wasted in production. How much material is wasted. Mass balance approach. It is used to identify how much waste has been generated in the system. Then, whereby the weight of the materials bought is compared to the product yield. Weight of the material bought is compared to the product yield. So the remaining will be the waste itself. So that is waste. Water. So business pay twice for water. One is firstly to buy and secondly to dispose it. Business pays twice for water. One is to buy. First one is to buy. The second one is to dispose it. Then, so if the savings are to be made in terms of reduced water bills, savings can be made in terms of reduced water bills. It is important for the organization to identify where water is used and how the consumption can be reduced. We have to identify where the water is used and how the consumption can be reduced. In case of energy, often energy cost can be reduced significantly, that too at a very little cost. Energy cost can be reduced significantly with a very little cost. Then EMA may help to identify inefficiencies and wasteful practices. EMA will help us to identify inefficiencies and wasteful practices. So therefore create opportunities for cost saving. It will create opportunities for cost saving. Then transport and travel. EMA techniques may be used to identify savings in terms of travel and transport of goods and materials. At a simple level, a business can invest in more fuel efficient vehicles. Then consumables and raw materials, these are directly attributable costs. Consumables and raw materials directly attributable, right? Directly attributable costs, and discussions with management can reduce such costs. For example, toner cartridges for printer could be refilled rather than replacing it. Okay, so these are the 5 types. WWETC. Waste, water, energy. Then T, transport and travel. Then C is consumables and raw materials. We are done with this particular topic, EMA.